Good morning, VV Nation. Glad to be here. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and you know that I'm a lot on this channel. So, first off, let's get VV Nation up and running. If you are a subscriber to the VectorVest software, click a 1. If you're not a subscriber to the VectorVest software as of yet, click a 2. Now, for those people who are clicking on number 2, listen, we're not going to try to hard sell you anything. We're going to let the software do the work because it's just that good. If you are not a subscriber to the channel, I invite you right now to hit the subscribe button because what you're seeing here is a big event, right? That's what we've got going on. But on our channel, we put a lot of good content, a lot of great information about what's pertinent to the market to keep you abreast on making the best decisions utilizing the VectorVest system. As Todd talked about and as Dr. DeLito has talked about, the founder of the company, this is a lot of common sense. And a lot of us incorporate what we think, what we feel into our investing. And time again, the market has a way of humbling you each and every time. There's a difference between just data and information. And as Dr. DeLito talked about, the information that we have here is mathematical. It takes the emotion out of the market. Now, how many of you, whether you're a subscriber or not, how many of you still struggle with making the best decisions on the stocks that you buy? Type a me in the room. I'm curious to know, because a lot of you who are subscribers tend to go your own path, and then you stray away from what VectorVest provides for you, and you get yourself caught in a quagmire of hurt each and every time. And every time the market goes down, people are nervous, people are afraid, and people leave. Folks, this is not the time to leave. This is the time where you need a system like VectorVest that's been around for as long as it has to prepare you for when to get back into the market. So you know something? Cash is a position. If you're not comfortable with the current market's conditions right now, cash is a position. But there's many of you who are a little bit more aggressive. You still want to take advantage of all the bumps and wiggles in the market and in stocks, and you can still trade that. But that's not for everybody. All right? So big. This is not the time to be running away from the market. This is a time to come and snuggle up to the market with the helpful guidance of VectorVest to help you to make the right decisions at the right time. All right, if you haven't already, hit that like button, especially if you feel that the information that we're providing for you today is useful. Remember, it's all about you on this channel, and VV Nation, you've made this channel what it is, and we are thankful for that. And we're going to continue to provide you with the information based on the philosophies of what the VectorVest system has to provide for you to help you to always make the right decisions at the right time. All right, so the next talk we're going to get into is the VectorVest system of analyzing and ranking stocks. Now, why is that important? Because you know that there's people on TV, you got your next door neighbor, you got your dentist when you're sitting in the chair, and he's saying, so, I got a stock pick for you. Yeah. All of those people are out there to give you stock picks. But how about you take those stock picks and not blindly buy into them and use our way of analyzing stocks so that you have a head start on what's really going on with those stocks. Because in the book that Dr. DeLito wrote, Stock Strategies and Common Sense, the key words there are common sense, all right? Common sense. Why not put to the forefront of your investing the best information that makes sense, and not buying stocks by what you think, by what you feel, but what's there for you to give you the right information. You know something? That's what it's all about. All right, so when you're looking and thinking about common sense, it's the idea of truth versus fiction. Truth versus fiction. Which side would you rather be on? I would say you want to be on the side of truth. And sometimes when we analyze a stock that we think is the best stock since sliced bread, the VectorVest system has a way of going, not so fast, my friend. And a lot of times we don't want to hear that. And because we don't want to hear that, we ignore the information. not the data, but the information. And again, it puts us into a world of hurt. We need to keep you from recovering and keep you on a path to building. And that's what this is going to help you with in regards to ranking stocks. So, VectorVest believes every investor should know what a stock is really worth, how safe it is, and when to buy, sell, or hold. Todd covered this. He covered it in great detail. So, in regards to what your stock is worth, we want you to be in undervalued stocks. How do you value a stock? We're going to talk about that. How safe it is. How consistently does the company meet or exceed earnings expectations quarter over quarter, year over year? Why? Because earnings is the engine that drives the stock's price higher. When to buy, sell, or hold. You know how many times I hear, hey, Glenn, like what you do. What do you think I should do with Tesla? What do you think I should do with Apple? Well, we have in this system buy, hold, and sell recommendations. You never have to ask anybody that question. And if you're asking that question, it's because you're thinking with your heart. You think the stock is going to go up, and you don't want to get rid of it. Let the information supersede that and say, you know something? There's a bad time to be in a good stock. That's useful information when analyzing stocks. This information you can't get anywhere else because it's proprietary, but we give you as much information as we can behind these stocks to let you know what's going on and how to use it. Now, what's your stock really worth? Well, value is computed by VectorVest, and it tells you what your stock is currently worth based upon a couple of things. Earnings and earnings growth rate. Why? Earnings is the engine, and if the earnings are good, what's the rate that they're growing their earnings going forward? Our earnings is forecasted 12 months out. So it gives you more than just what the current earnings are. It tells you what the current earnings or what the earnings should look like a year from now. That way you can determine, wow, that stock's got great potential to grow in its earnings over the next year. I like that stock. It's also based on profitability, inflation, and interest rates. Well, we're going to get into inflation and interest rates in a second because those are one of the, couple of the three main movers of the market. If a price is less than value, a stock is considered to be undervalued. That's where we would like you to be. But a lot of companies right now are overvalued. Does that mean you don't buy those stocks? No, that just means that people are willing to pay more than what the stock is worth. All right, but now there's other things to look at besides that in regards to, is this a stock that we want to get into? And when a price is more than value, you're paying a premium. All right, so when a stock is over its value, I misspoke. If a price is less than value, a stock is considered to be undervalued. But when it's overvalued, you're paying a premium. You're paying more to own it. Well, it's because a lot of people are jumping on board because they feel the same thing too. All right, now, what your stock is really worth. We're going to look at two stocks in this presentation. LNG, and this is as of 8/22 of 2022. Don't worry about the date because we're going to do some now analysis as well. All right. Cheniere Energy, LNG, carries a price of $165.24 with a value of $220. That's what you consider to be an undervalued stock. Normally, on an undervalued stock over the next 1 to 3 years, price should rise to meet value. That's why we want you in undervalued stock. It's got potential to rise. Now, when you're in an overvalued stock, people who are willing to pay a premium to own the stock, normally over the next 1 to 3 years, the stock's price should fall to meet value. Thus, the reason why we want you to be in undervalued stocks. You should be favoring buying those types of stocks. So we put a value on every stock. It is an intrinsic worth on every stock. So before you buy it, you have the wherewithal to know if the stock is currently under or over its value. Again, we favor you buying into undervalued stocks. Now we look at its upside potential. Now we get into our proprietary indicators. These indicators are all cast on a scale between 0 and 2, and we make it extremely simple to understand. If the indicator is above the value of 1, it's favorable. If it's below the value of 1, it's unfavorable. I don't think you can get any easier than that. And then when you look at a stock that's just at the cusp and you say, well, listen, it is what it is. Maybe you wait for that indicator to get above the value of 1 before you pull the trigger on it. That's the useful information. Not just, hey, Go buy. Oh, what do you think? I should buy it. Oh, why? We don't want all of that. You know what that's called? Noise. What you need to do is keep your heads off the swivel and focus on the information that's going to help you make money and grow your portfolio. Relative value looks at the future. It compares price and value. It takes a stock's risk and earnings growth into account and indicates the investment's potential of a stock compared to a similar investment in AAA corporate bonds. You buy into a bond, after it matures, you get your money back with a small little interest rate on it. Is the stock's ability to make money, is it going to outpace that AAA corporate bond? Is it going, and in this case, we're looking at the AAA corporate bond as the market. Will it outperform the market? And that's important information before you go buying into a stock. You want to look at, make sure that the stock's relative value is above 1. Now, the higher above 1 it is, the higher the potential that the stock should outperform that AAA corporate bond. All right, so as we look at that, Cheniere has an RV rating of 1.83. Well, we know right off the bat, it's above the value of 1. At 1.83, the stock should outperform that AAA corporate bond by 83%. Whew! So if I'm looking at a stock that's got an RV that high, I feel a little bit more comfortable long-term being in that stock. The upside potential of that stock is definitely there. Now, the other stock that we're going to look at, and I didn't talk about it on the other slide, was Beyond Meat. BYND, it's got a relative value of 0.08. Whew. Well, is that stock a good stock? Now, you'll hear on TV, you'll see a news article, hey, something happened with Beyond Meat, it's going to explode. And you go out and go, yeah, I'm going to buy that stock because it's going to explode. Long term, the information that you get from the VectorVest system says, oh, not so fast, my friend. I don't think it's going to go. And remember, this is mathematical. It's not what the people on TV are saying. It's not what a news article is saying. It's not what Joe the plumber down the street is saying. It's none of that. It's all mathematically based. That tells me from a system-oriented program or looking at these indicators, that doesn't have good upside potential. Cheniere Energy has a far better upside potential over the long term. The long term. So if I'm looking at stocks and I'm trying to hold a little longer, RV plays a major role in that. Does it have good upside potential? Now, I'm a fan of Apple, love Apple, but you know something? I also know that there's a bad time to buy into a good quality stock. And I'm going to use these indicators. And even if RV is above 1, when I look at a graph, is it falling? That's information. That's useful information. And it's designed to help you to make a better decision in the stock. Because how many times, type of me in the room, how many times have you been in a stock, not done the analysis, and the stock falls off the face of the earth, and you say, what happened? Type of me in the room if you've been in that situation. And you sit back and go, what happened? Now you have VectorVest. You look and you go back to the time where you went and bought that stock. You saw that the indicators in VectorVest were telling you that they were falling. And that's when you sit back and go, man, I wish I had VectorVest back then. Because now you're in a state of recovery, not in a state of growing. We always want to keep you in a state of growing. And the talks that we have for you today will set you on the path to be on the way of growing and not always having to recover. How many of you sit back sometimes and go, I'm tired of recovering? Type of 1 in the room. How many of you feel that you're tired of recovering? You're tired of working twice as hard to make up what you lost on the stock. Folks, that's real world stuff right there. And I think a lot of you can relate to that. But this is why these indicators were created. Dr. DeLito saw the need for these indicators, and he put them out there for you guys. He wanted to touch all the investors that he possibly could in regards to making better decisions that he made before he made this. He was in that hurt locker. He was in that quagmire of what's going on. But he sat down and put together a system to help you make decisions so that you, especially if you're brand new out there, so that you don't have to go through what many other investors have because they didn't have a system like VectorVest. That's what this is all about. All right, let's go to the next indicator. How safe are your stocks? Todd did a great part of his presentation on explaining just how important safety is. It's an indicator of risk. How many of you don't want to take a bunch of risk in your stocks? Relative safety is ideally suited for you. You're going to find that these indicators are suited to you no matter what type of investor you are. Whether you're an aggressive investor, a midterm or swing trader, whether you're a longer term investor, we have an indicator to help define the stocks that fit your investment style. Folks, we track over 9,000 stocks in the system. Folks, that's enough to help any of you out there. But knowing what these indicators are all about is ideally suited to help you to make those decisions. It's computed from an analysis of the consistency and predictability of a company's financial performance. Debt to equity, sales, business longevity, and that's big. Business longevity, price, volatility, and other factors. Folks, there's a lot of stuff. And a lot of people always ask me, well, do you have debt to equity? Do you have price to book? Do you have a lot of those indicators, a lot of that data is tied up into this information. All of that financial stuff that you could be looking at and poring over for hours can be easily discerned on if this indicator is above one or below one. Now, I'm not trying to say that investing is just that easy. It takes work. But if you want to have an opportunity to shave off a lot of hours of research, that's what this system will do. How much is your time worth? And if VectorVest can save you time on analyzing and ranking your stocks, is it worth it? Think about that. Now, that's an internal question. That's a rhetorical question. But if you sit back and go, I got you. I want you to keep listening because this information is for you. If you're sitting back having to second guess a little bit of what you're currently doing. If you want to take that investing to the next level, that's what these indicators will do. Now let's go look at those same stocks. Cheniere, it's got a relative safety of 1.37. It's favorable. This company consistently meets or exceeds its earnings expectations quarter over quarter, year over year. That's what you want, right? Beyond Meat, on the other hand, remember, this is that hot stock that's on the news and everybody's telling you got to go buy it because they got a new contract with Arby's. So you're going to have Beyond Meat roast beef. I'm just making that up. I don't know if anybody wants to eat Beyond Meat roast beef. If it ain't meat, it ain't meat. That's just me personally. But look at that relative safety at 0.51. This company doesn't always meet or exceed its earnings expectations. And knowing that earnings is the engine that drives a stock price or a market higher, So if you go buy the stock and you say, Joe Schmo on TV was saying that this was coming out with it and this was coming out with it and this is coming out with it, and you go, fine, I'm going to go buy that because Joe Schmo said it's okay. And he gave me and argued the point why it is. And then when the stock misses earnings on consistent quarters, hey, Joe, what happened? Well, that's the difference between data and information. And VectorVest is out there to provide you with the information. An investment in Cheniere Energy carries far less risk than a similar investment in Beyond Meat. And the cool thing about this is no matter how expensive or cheap the stock's price is, these indicators bode well on the individual stock to help you to make an individual decision, whether the stock's $1 or $100. These indicators will put them in place to let you know what's going on. Are your stocks rising in price? Oh, in the current market conditions, a lot of stocks are not rising in price. You know why? Because the market's direction affects about 80% of the stocks in the market, number one. Number two, from a market timing perspective, It's not a great time to be buying stocks. Can you still find that extra 20% that's going against the trend of the market? Absolutely. Do you want to do that? Some of you might say yes. We'll help you with that. But most of you are going to say no. And I understand that. But when we look at relative timing, is the stock going up in price? It's looking at the analysis of the direction, the magnitude, and the dynamics of a stock's price movement over 4 time periods. A lot of people ask, well, how do you determine RT? We look at day over day, week over week, quarter over quarter, and year over year, and we put the most emphasis on quarter over quarter. Why? What happens every quarter on the stock? Earnings. Why is that important? Earnings is the engine that drives the stock's price higher. So we look at 4 time periods to dictate or to tell you where RT is. And if it's above 1, the stock's in an uptrend. Now look at this. If a trend dissipates, RT will gravitate towards 1. Can that help you with when to get out of a stock if you've taken a profit? Absolutely. If I'm in a stock and I'm up 10, 15, 20% and I start to watch on an end of day basis, RT starting to fall, that uptrend is waning. Would that be a good time to start to think about taking some of those profits off the table? How many of you buy into a stock, it goes up 30%, and by the time you get out of it, you've up only 5% or you've taken a loss? Type a 2 in the room. This helps you to keep that from happening. If I can see, if it tracks the direction, the magnitude, and dynamics, if I start to see it wane and fall, and I still have a gain, don't be afraid to take that off the table. But that's information. A lot of you will just see the stock fall without the VectorVest system, will see the stock fall and go, it's all right, it'll recover. Oh, it's fine. And then it goes down, I think it's fine. And then it goes down some more and you go, crap, it wasn't fine. And then you've got to make that hard decision. When do I get out of the stock? Well, everybody should have some semblance of a line in the sand before you get into any stock. We have a line in the sand for you on every stock. We're going to get to that in a second. Favor buying stocks whose RT is more than 1 and rising, because that tells you that the stock is definitely in a uptrend. All right, now let's put all of this together. Well, before we put it all together, Cheniere has an RT of 1.37. There's that Beyond Meat again. That's hitting the news. Oh man, you got to go buy the stock, folks, because it's got this, that, and the other thing going. That's the information that you need to make the better decision. Beyond Meat's got an RT rating of 0.66. Stock's in a downtrend. The more below 1 it is, the faster in the downtrend it is. The higher above 1 it is, the faster in an uptrend it is. Cheniere Energy is rising in price, while Beyond Meat is falling in price. Kind of interesting, right? We talk about we want you to be in safe, undervalued stocks that are rising in price. Guess what? I just gave you those indicators. Safe, relative safety. Undervalued stocks, we give a value for every stock. Is that stock undervalued? That's rising in price. RT will help you with that. Folks, you want to stay with the mantra? When you look at these indicators, are they on any stock you're looking at? Is it safe? Is it undervalued? Is it rising in price? We've got it all there for you. If that's the mantra, you can stick to the stocks that meet that mantra at any point in time, folks. That's the power of the VectorVest system to help you to make the right decisions. Folks, that really does become common sense. There's no guessing here. There's no input from me here. There's no emotion from me here. It is the power of the system to help you to make the right decision. Now again, many of you will look at these indicators, I think that, I heard this news that this was getting ready to go on. VectorVest is wrong. How many of you ever thought that with the system, only to find that the system was doing exactly what it was supposed to do and could have saved your bacon? Type a 1 in the room. Oh, I know there's a lot of people out there, if you want to be honest with yourself, that have been in that situation. Oh, the VectorVest system doesn't know what it's talking about. And then when you look back, you sit back and go, holy smokes, if only I had listened. Oh yeah, I hear that more times than I'd like to. But that's why we do things like this. So that even if you're not doing these things now and you know you should, we're bringing you back to the table. We're taking you from that recovery path and putting you on the growing path. Folks, we can only bring you to the path. We can't make you walk the walk. We're going to talk the talk. But it's up to you to walk the walk. That's all we can do. And that's why it's important to know what these indicators are so that you can incorporate them into your buying decisions. Now, let's take all three and put them together in the master indicator. Do you own stocks with good combinations of value, safety, and timing? Value, safety, and timing, that is our VST vector. That is what we were named after. It's computed from the square root of the weighted sum of the squares of RV, RS, RT. Don't ask me anything more about that than that, because it's math. I can get past 1 + 1 is 2. But it's the square root of the weighted sum of the squares of these indicators. Stocks with the highest VST ratings have the best combinations of value, safety, and timing. Now, I keep getting asked this question. Does that mean it's the best stock in your database? It means it's the stocks with the best combination of value, safety, and timing. And now you know how important those indicators are. So now these stocks represent the cream of the creme, the good stuff of what those stocks are by VST. Okay? Stocks with the highest VST ratings have the best combination of value, safety, and timing. Favor buying stocks whose VST are more than 1. Still looking at these two stocks. LNG's got a VST of 1.51. Notice that LNG was the best of all worlds. Beyond Meat had a VST of 0.24. Beyond Meat was the worst of both worlds. But somebody on TV is telling you go buy it. That's blah, blah, blah. This is the information that you need to make the better buying decisions. Cheniere Energy has a much better combination of value, safety, and timing. All right. Remember I told you there was a hard line in the sand for every stock? It's called the VectorVest stop price. The stop price is computed from a 13-week moving average of closing prices. And here's the other part of it. A lot of people think, well, I'll just go put a 13-week moving average on a stock. I get the stop price. Oh, no. It's fine-tuned according to the stock's fundamentals. Well, which indicators are the stock's fundamentals? Relative value and relative safety. See, I didn't tell you that when it came down to VST. Because when I look at the overall VST, we are using a combination of fundamental analysis with the insight of technical analysis. The RT is the technical indicator. So you're getting a well-rounded picture of that stock before you buy it, looking at the fundamentals and the technicals. So when I'm looking at the stop price, though, I'm strictly concentrating on the fundamentals, RV and RS. What does that mean? Well, if the stock is fundamentally sound, we're going to lower the stop price to keep you in it longer. If the stock is not fundamentally sound, we're going to get you out of that stock faster by raising the stop price. Oh yeah, every stock in the database has a hard line in the sand. Now it's more of a conservative stop. But a lot of people out there are a little bit more conservative in the market for the most part. Not everybody. Could be somewhere between prudent and conservative. That stop is ideally suited for you. Again, I get the question, well, should I hold on to that stock? Well, a stock is going to get a buy, hold, or sell recommendation, which we'll talk about in a second. But if a stock goes below the stop price, that 13-week moving average adjusted for the fundamentals, if it goes below that stop price, the stock will automatically get a sell recommendation. Well, I don't want to sell it. Don't. Whose fault is it if it continues to go down and you take a bigger loss? Oh, no. I'm not trying to be cocky. I'm trying to show you the importance behind the information that you receive as a VectorVest subscriber. You hold on to that sell recommendation stock at your own detriment. And when it goes down, because we don't know how low is low on any stock, and you sit back and go, wow, there's another one of those times, I wish I would have listened. Our stock price can be treated as gospel or guide. That's something that Steve Chappell has taught me for the longest time. And I'm sure he learned it from Dr. DeLito. I'm assuming. Gospel or guide. Gospel is, if it falls below the stop price, it's a sell, I'm getting out. Guide, well, it's a sell, but I'm willing to give it a little bit more room. Understand that you made that decision. And you have to be and will be accountable for that decision, depending on what that stock's price is. It's up to you. All right. Price stop comparison. Because the stock is fundamentally sound, LNG carries a price of 165 and a stop of 141. Notice how further down it is on LNG to get out of that stock if you're using it as gospel. Notice that Beyond Meat has a price of 27.06 and a stop price of 27.24. Ooh, it's below that price. Because the stock wasn't fundamentally sound, we raised that price and got you out faster. Now it's a sell. You don't need to be in it. Oh, but no, Joe Schmo told you you got to go buy it. Well, Joe, stock doesn't have any fundamentals. Stock's not going up in price. Stock's a sell. Even if you think it does have some upside, wait for a better opportunity. Wait for these indicators to improve before you pull the trigger on those stocks. Cheniere Energy has a much better combination of value, safety, and timing. The bottom line, all factors are considered in making buy, sell, hold recommendations because there's three ways a stock can go. It could be a buy, it could be a sell, or it could be a hold. We'll start with the sell first. The price is below the stop price. That's the easiest way to know stock's below the stop price, the stock's a sell. Now, let's talk about how a stock gets to be a buy. It takes 4 things to happen. 1, the price has to be above the stop price. That 13-week moving average adjusted for the fundamentals. 2, VST has got to be above 1. The full complement of indicators has to be above 1. RT, stock's got to be rising. Stock's got to be, RT's got to be above 1. And the price has to be moving away from the stop price. It takes a stock a lot of work to get a buy recommendation. When you see a stock in the system that's got a buy recommendations, it's not because we're sitting in a little secret room determining whether or not we want to give this stock a buy. It's got to meet criteria in order to get a buy recommendation. And then hold, if any of the other, if the stock doesn't have all 4 of those things happening at the same time, the stock will be a hold. The price is still above the stop price, but any of the other 3 factors needed to receive a buy are not met. That's why we have as many hold recommendations in the system that we do at any given time. People always ask, why do you have so many hold? Because they don't meet the full criteria to be a buy or to be a sell. All right? Cheniere Energy has been a buy since 7/21. Beyond Meat has been a sell or a hold since 3/18. So what do you do with a hold recommendation? Well, you do just what the name says. You hold it. And see if it continues to go down, or if it continues to go down, especially if you're looking at RT, make a decision, especially if you're up in the stock. All right? Now, this is where we start to get into the software. The stock viewer is your entrance into the VectorVest. It's an enormous spreadsheet of all of the VectorVest indicators and parameters. So we just went over all of the indicators, right? So I'm going to bring this up here. It's an enormous spreadsheet of all of the stocks that we have. We track a lot of stocks. Let's get into the software. And I'm going to create a watch list in here. All right, no, I'm not going to do that yet. Let's go to the Viewers tab. Let's go to the Stock Viewer. Here's our enormous spreadsheet. Now, Dr. DeLito wrote an essay back in 2006, 11/10 of 2006. Let's do that real quick. Let's go to the Views tab. Let's go to 2006. Hit here again. 2006, November 10th, which happens to have been the Marine Corps birthday. Click on OK. How I use the stock viewer. I invite everybody in this room, if you have a subscription to the software, to go back and read this. Not only that, I would say print this. You probably have heard the story about a guy who was called in by the IRS to have his tax return audited, showed up to the IRS office. He carried in 2 large shopping bags of check stubs, receipts, and stuff, and dumped them on the auditor's desk. Here, he said, figure it out. A lot of the market is designed to do a data dump on you. But within the VectorVest system, by utilizing these indicators, you have a way to sift through that data to find the stocks that fit for you. So I'm not going to go through all of it, but Dr. DeLito says the stock viewer is a gold mine, and it is. Who doesn't like mining for gold? 9,000 stocks to be able to sift through and find the gold within and extract it. Dr. DeLito in this essay talked about using earnings per share, why it's the engine that drives the stock's price higher. He looked at another indicator that we hadn't talked about today called CI. It's another technical indicator. It's the comfort index, and it looks at price growth persistence. Stocks that have the ability to keep moving up and up in price. We got an indicator for that. Also casts on that scale between 0 and 2, where above 1 is favorable. The stocks that have a CI above 1 are stocks that consistently move up. He also likes to look at the big boys by looking at the dollar change. He also likes to look at, from a more aggressive perspective, which stocks have gone up the most that day. So I invite you to go and take a look at that essay. And again, I would love for you to print it and go through how Dr. DeLito uses the stock viewer. I'm going to go back to the stock viewer, and I'm going to look at a couple of things here. All right, remember, we tracked over 9,000 stocks, for example. We tracked 9,164 stocks. The first thing you'll see is that this list is sorted by VST. So the stocks that have the best combination of value, safety, and timing already come to the list. How cool is that? Out of 9,000 stocks, to show you the stocks that have the best combination at your fingertips. Woo! How much time did that take you? Remember, how much is your time worth? Does this prove useful to you? Instead of looking through all of the stocks to see which stocks have the best combination, I can go through and look at the stocks that meet my pricing criteria. Maybe I'm looking at less than $10 stocks. Do I have some VST stocks that are less than $10? We can sift through that. Maybe the $20 to $50 range, whatever it is, we can do that. Now, keep in mind that the market overall is down, right? Even though these are the best combinations of value, safety, and timing, you also know that some contras are up in here as well, which means the system is doing exactly what it's supposed to do to help you to find the best stocks to get into, even right now. Folks, when I say that this is not the time to run because the market is moving down, I ain't just whistling Dixie. The system is going to provide for you, whether it's bullish or bearish stocks, what's the best for you to get into. And now that these contras are moving, it's putting to the forefront of the top VST stocks that way to take advantage of the market as well. How easy is that? That's useful information, folks. You're not using emotion to find these stocks. All right, fine. Let's say you're looking for the safest stocks in the database. Well, we can sort from this viewer right on safety. Relative safety, boom. These are the stocks that consistently meet or exceed their earnings expectations quarter over quarter, year over year. This is the engine that drives the stock's price higher. Now, a couple of these stocks are sell recommendations. Why would I want to buy those? Well, understand that the market is still moving down. Even the safest stocks will exhibit some pullback. Maybe I just concentrate on the holds or the buys. But do you want to go against the trend of the market? So when the market's good, you sort by these indicators. Or if you say, no, I still want to be in the market, but I want to find the stocks that are the safest stocks, can you do that? I'm still going to say you don't want to bet against market timing. We're going to talk about that later this afternoon. But that's important. Yeah, I can bring out the stocks that have the highest relative safety. I can bring up the stocks that have the best potential to outperform the market. Those are those growth plays or those value plays. Yeah, they're getting hurt. That's why market timing is so important. Let's go look at the stocks that have the most, that are moving up the fastest. Wow. Look at these stocks. Look at these relative timings. Way up there. Look at this. Got a contra up in here. I got a contra up in here. I got a couple of contra. I got another contra. I got another contra. Those are the fastest moving stocks in the database. We're doing the work for you. You know what we're like? And I love using this analogy. We're like the Dow scrubbing bubbles. We work hard so you don't have to. These indicators are going to bring to the forefront, and you know something? They may bring up stocks that you don't even know about. That's okay. If they're doing what they're supposed to do, you might be introduced or exposed to a stock that you don't even know about, but the indicators say it's okay. I know that this stock beat is moving because on YouTube, it was either yesterday, it was trending Thursday, I talked about some news on the stock. A lot of these stocks that have RTs above 1 could be news driven. But look at the stocks, look at the graphs to determine if they have some more upside potential. All right, big move back after the move up yesterday. That's probably some profit taking. That's going to happen with some of these RT stocks. Remember, market's direction is important. All right, so now we looked at, let's go look at earnings per share. Stocks that have the biggest earnings per share, they're going to be some more expensive stocks. But remember, these are the stocks that have the ability to meet earnings per share, high earnings. These companies make money. These companies make money. All right, and it's something that you want to consider as you go through the treasure trove of looking through the stock viewer. All right, so in the stock viewer, we talked about these indicators. We've now been able to sort the list by these indicators. Again, this indicator in the view is called CI. Again, stocks with high CI are stocks that consistently grow higher. Stock growth, price growth persistence. Stocks that just keep moving up. Is that something you want to feel that you want to get into? But keep in mind the market's direction. All right. I'm always going to put that out there. Market timing is paramount. All right, we're going to do one last thing before we go. All right, we're going to build a watch list. Watch list viewer all. I'm going to create one for today called new group. We're going to call this masterclass. So anybody that's giving a presentation today that needs to use this watch list, we're going to call it masterclass 2022. All right, so I've created a new group. Within this group, I can create a new watch list by simply clicking on new watch list. Boom. Let's bring this over. And let's call this my stocks. And I'm going to build a watch list of stocks that many of you might or might not have. These are going to be names that you know. All right, these are going to be names that you know. Sigh. We had the stock that was put into the slides, LNG. Simply when you put it and build a watch list, type in the symbol, separated by a comma, INSW, shipping company, comma, CPRX, drug company, sigh, comma, BTU, another energy company, comma, ARLP, a coal company, comma, CLFD, comma, CEIX, comma, Apple. You know if I'm up here, Apple's going to be in the list. If you know that, type a 1 in the room. Apple, Adobe, tech stock, and Ford. So now when I open it up, let's say this is a listing of your stocks. This is something that everyone should do. If you're an existing customer, you should have done this long time ago. And if you didn't, you need to do it now. If you're brand new and you're taking the trial, you need to do this to see where you stand right now. Take the ambiguity out of what you're doing. This is information. This takes this and this out of the equation. Now you look at this and you say, well, I don't like that, what they say about my stock. Get over it. We're not designed to tell you what you want to hear. We're designed to tell you what you need to hear. That's the difference between data and information. Listening to the talking heads on TV and having a system designed to help you get off the road of recovery and back on the road of growth. Folks, that's common sense. And many of you sit out there and you're looking at, well, Glenn says that Apple's a great stock. Absolutely. Not now. Who's to say that I can't wait for the stock to come to me instead of buying it and holding it on the way down? Now, there's some savvy people out there that have Apple a long time, but you're playing defensive measures on it. You can do that. But not everybody is that savvy. Those three stocks at the bottom, Adobe, Apple, Ford, all have sell recommendations. They may have some good upside, excuse me, and actually two of them are fundamentally sound. That's the information. They're in downtrends. Sometimes it's a bad time to be in a good stock. You gotta listen to that and adhere to that. Because no, it's good, it's sell, I'm taking a loss, but I know it's gonna come back. Do you wanna double the move to get back to where you were? Or wait for a better buying opportunity when the time is right? A lot of you want to catch the falling knife. A lot of you want a dollar cost average down. Ooh, Doc don't like that. It's like trying to catch a falling knife. How low is low? Do you want to keep taking a hit in that stock? It's on you. The stocks at the top of the list, they're doing exactly what you wanted them to do. They're buys. But you know something? Keep your eyes on these RTs. Are they starting to fall? That could be a good opportunity for you to take the profits off the table to make sure you lock in profits at the right time. The ones that are holds, one of it's fundamentally sound, ARLP, and it's got RT above 1, but it doesn't meet all the criteria to be a buy recommendation, and neither does CEIX. Folks, if you haven't done it already as a subscriber, you need to. If you're brand new and you're signing up for that trial, do this first. Todd did a great job of telling you the philosophy, why we are what we are and who we are. This is the next step. Analyze your stocks so that you know what to do and at the right time. One thing we do need to read the graphs real quick. I can do this. Highlight them all. I want to do that really quickly. When I'm looking at a graph, putting on a 1-year graph. When I'm looking at a graph, I want the stock to go from the bottom left to the top right. Is my stock doing that? The stock's at the top, most likely. Look at that, INSW. CPRX, little pullback, but running back up again. Clearfield, bottom left, top right, came off a high hard. Look at that rebound. Look at the earnings per share. Look at the VST. Look at BTU, a little bit of a sideways move. Look at ARLP, pulled back, starting to move back up. But look at the overall graph. Look at the earnings per share. Folks, as you do this, woof, look at Adobe. It's a sell. Look at Apple. It's all over the place. I might like it, but it's all over the place. And Ford, definitely in a downtrend. All right, so that's real quick on looking at the graphs. This is all the information you need to get started making money with VectorVest. Folks, we want to move you off the road of recovery and always have the recovery stocks to growing your portfolio consistently. Todd led it off. I took you the next step. Everything else today is going to build on that foundation. And folks, like I said, this is not the time to run away from the market. This is the time to hold on to what VectorVest has to offer, and you need to invite your friends to do that. Folks, I'm done. We got a break. I'm getting ready to put this over to Ray. It was my pleasure to give this presentation. Hopefully you took something away from it. If you did, by all means, definitely type in the comments or hit the like button.